so golden, shine on me, darling. Your new skies are...
Hello everyone, I'm Ben with the BTC Sessions. I'm here in Kensington, Calgary, and today I'm bringing you an interview with a special guest by the name of Frank Holmes. He is from Hive. We're going to talk some current events, and I'm just going to dive into it right now, so please enjoy. Hello everyone, I'm Ben with the BTC Sessions. I'm here with Frank Holmes. He is the lead of the board of directors at Hive, and he's also chief executive and chief investment officer at US Global Investors, which is a leading mutual fund and asset management firm. We're going to be talking about some current events and what's been happening in the Bitcoin, crypto, and blockchain space the last little bit. Frank, thank you so much for being here.
Well, it's great to be here with you.
All right, great. Shall we just dive into it then?
Absolutely.
So I'm going to start here with a little bit on the bearish front. We had the likes of Bill Gates and Warren Buffett coming out saying some not super positive things this past week. Bill Gates is previously quoted as calling Bitcoin an economic tour de force. But this week he comes out and he says, I would short it if there were an easy way. And then you have Buffett calling it rat poison squared. So not super positive. Now, I'd love to get your take. Why do you think these individuals might think this way? And what do you think they're missing here?
Well, I think that Bill Gates is such a sophisticated player. He knows he could easily short it in the futures market. And it's now no capital issue for him to put up $1 billion to be able to go short. So I think that there's a narrative that Warren Buffett and Charlie Munger, who I have greatest respect for, but let's put it in context. First of all, he never bought Apple 10 years ago. He never bought Apple 5 years ago, and just recently started buying Apple stock after it's had this spectacular move and has become the dominant phone of the world besides music, multi-billion-dollar business. Warren Buffett's going to come in much later down the road after something's proven. That's just him. Greenspan is also, I was at a conference, a gold conference, a very small group a week ago in New York City, and Greenspan was there speaking with us. And he's anti the Bitcoin also. But there's a rational reason for these older guys, what they're thinking of. First of all, I had to learn. I'm an older guy, and I had to try to embrace the change that's taken place with millennials. And the big difference is a new form of trust. Money is all about trust. Running gold funds, advocating, writing about gold. I have 40,000 readers a week read my stories around the world. I talk about gold because people in gold we trust. Now, can you trust something that's digital? My big wake-up call was my godson showing me about Tinder and how he looks for dates. Yes, no, yes, no. I would never trust that. I don't know if that person's a fraud on the other side, et cetera, et cetera. At the same time, I was a slow adopter to Uber. I was a slow adopter to Lyft. I was a slow adopter to Airbnb because these are all new forms of trust. Can I trust that hotel, which is the largest hotel in the world, but owns no hotels? Uber is the biggest taxi company in the world and owns no taxis. So it's just recognizing this element of trust has now gone to a currency. And the currency is a new form of trust. And what's happening is that blockchain is been woken up because of the raving success of Bitcoin, which is different than the web. The web is a transfer of information. Bitcoin is a transfer of value. And along comes a smart contract of Ethereum, and we're going to be having embedded insurance contracts. We'll be able to put in titles for property, etc. So this whole concept of decentralization, and I just always get blown away. There's 12,000 nodes around the world involved in mining Bitcoin, and the ecosystem of Ethereum. I think they have 7 people in the foundation, but 30,000 people globally that are devotees of Ethereum, and they're not being paid for that. So it's a very new world, and I think that that's the bigger part. Now, what's true and what their worries are and what's really unraveled this year, the crypto world, has been these ICOs. And I so often get asked, is Bitcoin replacing gold? Is it a trouble for gold, etc.? No, the original buy into the Bitcoin thought process were actually gold bugs. in my research and going around interviewing people and talking to them, but they never sold the gold to buy Bitcoin. They just diversify. But what's happened in the exploration world, looking for oil and gas in Alberta or gold in British Columbia or Ontario or Quebec, that speculative money has no longer being as attractive for the millennials. They'd rather go buy an ICO. So last year, 1,000 new ICOs have replaced what would be IPOs, and a $5 billion went into speculation. And the concern by the regulatory world is people marketing something that's supposed to, they say, is a currency, but really it's a security. There's no full, true, plain, and timely disclosure for those buying those coins. So there's this great concern. And that's why we've seen the first big sell-off this year was a Senate meeting. Then we had a rally. Then we had a next meeting was at Congress and the SEC, and there's another big sell-off. And then we had a big rally and then a sell-off for tax season because people had to sell their coins to pay their taxes. And then now we've had this rally period. We probably have one more test between now and July when the G20 finance ministers, which I like to call a cartel, are supposed to come out with an announcement of how they're going to look at the crypto world and have some guidelines by mid-July. But this is a big story. It's evolving. It's emergent. And it's an emergent industry, pivots, forks, does all these changes as it grows.
Yeah, absolutely. Now, you were touching on the idea of millennials are really jumping onto this thing. And there was just a Forbes article the other day talking about how Bitcoin and cryptocurrency is kind of like this generation's rock and roll, where they're gravitating towards it. And maybe some of the past generations have this feeling of distrust, like you've been outlining. Now, what do you think about it is so scary? Is it that they're so entrenched in the old way of doing things? And is there anything that we can do to help them understand, to better educate?
Well, I think, first of all, everyone should look and remember Maslow's hierarchy of needs. And at the bottom is basically we need water, food, and shelter. But the most important word is safety. We have to feel safe. We have to have trust. And that old school is not really bought into trusting as of yet. But it's just going to evolve, I believe. But I think what's important to recognize is that the concern of AML, anti-money laundering laws, and KYC, know your client rules, it's superseding all the banking regulations, etc. But along comes the millennials with Coinbase, and you mean in 5 minutes I can open an account and speculate on a coin. I can speculate on Ethereum right away, and it takes me 3 to 5 days to open a new brokerage account, and the cost of all that. So the millennials aren't waiting, just like Tinder. Yes, no, yes, no. They're not waiting to hear the story and wait 3 to 5 days. And there's so much more publicity. It also shocked me on Facebook, not on Facebook, on TED Talks. TED Talks is that there's so much content on TED Talks on blockchain and cryptocurrencies that there's a whole audience around the world that become interested in this topic. And I know the newsletter writers tell me that if they talk about gold or they talk about Bitcoin, there's a huge surge in interest from their newsletters. So you're seeing actually a lot of their customers, something like 70% of 70-year-old people are actually interested, who are speculating in this space.
Yeah, I absolutely agree. I see it day in and day out. A lot of, like you were saying, the gold bugs that really like the idea of sound money, they tend to gravitate towards it once they understand that this stuff is exuding the same properties. Now, I wanted to touch on one other thing with you here. This is in regards to Facebook, Google, and Twitter. They've recently started banning ads for initially what looked like it was just going to be ICOs, but it's turned into more of a blanket ban for all cryptocurrency companies. So regardless of whether or not you've been a legitimate business for an extended period of time, or whether you are, launching a fraudulent endeavor that is an actual scam, it's all the same at the current moment, and you just cannot advertise through Google AdWords, through Facebook and YouTube. So do you think this was a fair way to tackle it initially? Could they have done it differently? And how do you see this progressing?
Well, first of all, Google and Facebook are public companies. And when the head of the SEC is going to go in front of Congress to talk about regulations on the ICOs, there's easy to make a phone call to Google and Facebook that they believe they have a problem and there's cooperation. That's very easy. And especially because they can go and demonstrate that there have been some frauds here and there have been some gross misrepresentations on these ICOs that have become another form of speculative capital. So rather than raising money in the normal public market path, they've created these ICOs and they're selling sizzle. And this whole thesis, are they a utility, so they're actually a currency, or are they in cloaking, they're really a security, and they're not giving full, true, plain, and timely disclosure. So I understand the regulatory world coming for a crackdown on some of these characters that are out there. And Facebook and Google, remember, as I said at the beginning, they're public companies. And so it becomes very broad. It's like when we had 9/11, and then they started treating little old ladies going through the airport and children that were 1.5 years old, that they were like terrorists, because they treat everyone the same. And so all of a sudden they start becoming better at it, more sophisticated. If you think from 2001, 9/11, until when they finally came out with TSC pre-check, it wasn't until 2014 that they rolled it out across the country. So you're living with that sort of regulatory world and the concerns. I think they can clean up their act quickly, and I think that the Google and the Facebook will come back to embrace it if there's standards of care.
Yeah, so it's more of a just kind of getting a handle on it first, and then starting to figure out what's easy and fair to advertise, and weeding out the bad actors.
Correct.
Yeah, absolutely. Now, Frank, while I have you here, I really would love to actually talk about a little bit about what you're doing. So first, can you tell me about your background, how you got into the cryptocurrency and blockchain space?
Well, I'm a gold fund manager. I've written books on how to invest in gold and gold stocks. We won many awards for recognition as best of breed for gold stock money management. In Canada, we've been recognized. I've been recognized. My fund team has been recognized for top guns as stock pickers and creating companies. We've been on the ground floor. Franco-Nevada, I took it public in '83. And same thing with Goldcorp, Silver Wheaton. So we have a good flavor for that. And I was trying to come out with a product, and I was launching a smart beta, or what they call smart beta, but it's really a quant-based ETF listed on the New York Stock Exchange. I had launched JETS for the airline industry, and then I was coming over with a smart beta for gold stocks. And I was at the New York Stock Exchange, and during that same period, my son and my godson were urging me to get into this business and to understand it, to come up with an ETF that would be Bitcoin related or Ethereum related. But when I met with the regulatory world, it was no way. There is no way, because of anti-money laundering laws, that they could take the risk of some hacker getting paid in Bitcoins, and those Bitcoins, because they can track them and trace them, show up on an ETF list on the New York Stock Exchange or the Toronto Stock Exchange. So the OSC wasn't going to allow it, and neither was the SEC. But I had been able to gather all this knowledge. Next week is Consensus. Last year I was at Consensus, and I was absolutely blown away to see that Abigail Johnson, the CEO of Fidelity with $2.5 trillion, the second largest discount brokerage firm in the world. She's a CFA, certified financial analyst. She never speaks at fund management company meetings. So now she's speaking at a cryptocurrency event. Now that was a wake-up call for me. And then talking to the New York Stock Exchange, they told me that they invested in Coinbase in 2015, and so had USAA, which is just up the street from me in San Antonio, that they had invested, I think, at a $75 million round. And last week was announced that Coinbase is worth $8 billion. So that was, for me, a big wake-up call that something was happening and how Coinbase was growing. And then my friend Frank Juster called me and said, my young guns, like I was learning from my son and my godson about the space. He said he was listening to his young guns, and they had a great idea to partner with Genesis Mining to create a public company, be the first industrial scale mining company, mining Bitcoin, and then we'll be doing Ethereum. So they had no institutional interest at this stage, but I was in. So I wrote a check for $5 million and said I would go on the board as a chairman and help raise the capital and build this company. And touch wood, it was the best decision I've made in a long time.
That's great. So this company that you're referring to is the one that I mentioned at the beginning is Hive. Is that correct?
Hive Blockchain Technology, traded in Canada, HIVE. There's a ticker, and in the US, it's HV, make sure I get it right, BT.
Okay.
F because it's foreign and it trades on the OTC market. It has great liquidity, great volume, and it's a miracle. We went to raise $30 million, went on the box. In 3 weeks, we were a unicorn. It was $1 billion market cap. We raised three major tranches of capital. So in the last quarter of 2017, we raised $200 million. And that
Wow.
basically assured our growth of power consumption in Iceland and Sweden from 2.5 megawatts to 45 megawatts by September of this year. That's a 20-fold increase. And our revenue was projected to come out originally at $1 million a month with 50%, 60% margins. Then we went to $1 million a week. And then we think
Wow.
it'll double by the time we roll it with Bitcoin. So we've been able to actually execute, even though the currencies have been volatile, our business plan because we have incredible partners of Genesis Mining.
Wow. So look, I want to touch on a couple things here because I mean, there's a lot to go over there. So, first of all, you guys are a publicly traded company versus a company that has utilized the tool of using an ICO. So, um, a lot of my viewers are they're very into the crypto space, but they may not be familiar with the difference between an ICO and an IPO, or a publicly traded company. Can you enlighten them on the differences there?
Well, first of all, ICOs trade 24/7, and public companies trade from 9:30 to 4, only from Mondays to Fridays. And any type of government holiday or religious holiday, they shut down. Not the crypto world. It's 24/7. And so the only thing they need is to make sure there's electricity and it all functions. And so that's a big, big difference. And I think you can get dividends that are being paid on stocks. You're not going to get that from a cryptocurrency world. The volatility is very, very important to recognize. The DNA of volatility, what they call a standard deviation move, 70% of the time. The daily volatility of the stock market is 1%. So it's a non-event for the market to go up or down 1%. Gold is also 1%, but gold stocks is 2 to 3%. Bitcoin and Ethereum, 6 to 7% daily volatility. So you're talking about 6 to 7 times greater than the stock market. And that's difficult to stomach for a lot of investors. So that those that go in the space got to recognize it's pure speculation. It's not buying for retirement dividend paying stocks, but it's very exciting because it's an emergent growth industry.
Wow. Yeah. So you had mentioned that you are dealing with Genesis Mining. Now, can you tell anybody that is unfamiliar who is Genesis Mining and how are they helping you guys?
Well, Genesis Mining, go to TED Talks and see the Marco Streng, Streng, not strong but with an E, TED Talk, and you'll just really appreciate the CEO's 28-year-old, highly successful kid. At the age, at grade 10, he had finished university math. When he was in university, he gave up on finishing his degree because he was too busy mining coins, and he created with another partner, Marco Krohn, a company called Genesis Mining, which provides a cloud space. So therefore, you can use by pools, you can use their technology, the efficient software to mine coins in Iceland and Sweden, and you can rent. So you basically can buy space for $2,000 for the next 2 years. You'll be able to get a pro rata ratio of your $2,000. You can put in $50,000 and you'll get more coins for your $50,000. So this idea for mining, because it became so competitive that people have to pool because they had to get cheap electricity. And so what they did is went to countries where there was green energy, like Iceland, geothermal energy. It's inexpensive energy. And they went in there and set up these massive data centers where they're mining these coins. They have 2 million customers that prepaid them for 2 years to go build this out to mine with. So we're talking about a multi-billion-dollar company with a kid 28 and his partner's 41.
That's great. I love spaces like this where people can really just jump in, people that are intuitive and they have that ingenuity to jump in and recognize where the inefficiencies are and find ways around them, like going to Iceland and utilizing green energy. Now,
the other part that's important is that they own at the beginning 30%. They now own just over 25% of Hive. So they are big shareholders of Hive, and so then we have a master agreement for them to run things. So in the world of gold stocks, they're very much like a Franco-Nevada royalty company. We have very few employees. We have predominantly creating a brand that Hive Blockchain, the first and profitable company. We had a 36% return on our invested capital in the first quarter. Our use of electricity in 6 months, as I mentioned earlier, the full 12 month, but we went from 2.5 megawatts to 24 megawatts. We'll go to 45 megawatts approximately, the number rounding it out. And it's a real booming business. And they're major players of this. So we outsource to them to run the operations for us. And so therefore we have very high revenue per employee. When you look at the Franco-Nevadas, they have $21 million of revenue per employee. So they're very efficient. Even Amazon has much higher revenue than its peers in the consumer discretionary stocks per employee. And we enjoy high revenue per employee.
That's great. Now, you guys have a new acquisition in Norway. Is that correct? I was reading that on the news part of your website.
We do. And it's a scramble right now. Being the first public company, remember, this was predominantly controlled by private entities or Silicon Valley. The public never had a chance that were stock pickers, stock players to go buy until Hive went public. When after Hive went public, it went crazy in Canada. As they told me, there's 50 new companies went public on the backbone of the success of Hive. But we're still the leader in that space. And I think what's important for investors is that we're the most liquid, and we still have this huge growth profile and for cash flow immediately to September. But we have to think beyond that. And to think beyond that, it's a scramble, like first mover to be public, but it's the first mover to get data centers at cheap electricity. And what we like about when you mine Bitcoin, you use ASIC chips, but they have a life of about 2 years. When you're mining Ethereum, and most of these new ICOs are on the protocol of Ethereum, then you need GPU cards. Well, guess what? GPU cards are also being used more and more for animation. There are all the recent sci-fi movies, they use buckets of animation. They need this power, and they use the cloud. And they also use it for artificial intelligence and machine learning. So we're seeing a big boom, and the need for our data centers is going to grow. So we want to be the first to be able to tie up. This is 100 megawatts. They could go to 200 megawatts, and it's ours to go build out with. So we believe that we're going to see Googles of the world, the Facebooks. In fact, they're in Sweden beside us. And there's going to be this scramble around the world for green energy in safe jurisdictions. So we're very thrilled about the partnership we've created in Norway.
That's fantastic. And I'm glad that you're touching on the fact that it's green energy and that people are trying to find these solutions, because there are criticisms of cryptocurrency saying that the mining is in somehow negative because it costs all this electricity in order to get your return. But really, it's spurring people into finding these ways of finding renewable and cheap power. And so I think
it actually really frustrates me what you're saying, not because you're saying, but the green movement have greatly exaggerated the consumption of this electricity. The biggest offenders are China, no doubt. They use coal for their electricity, which pollutes the world. And they become the biggest miners. Genesis Mining is the biggest, second biggest company mining coins in the world, and biggest in Ethereum. And it's becoming more efficient in the use of electricity in that space. So when I read some of these numbers, and it's impossible when you just do the back of the envelope calculations today. So there's been a lot of misinformation or fake news on how much electricity. But Genesis Mining are very clever. They went and found these pockets. And what we found in Canada was old pulp and paper mills that shut down, and they have surplus electricity doing nothing. So all of a sudden you go in and create jobs. Old mining communities in northern Quebec that are shut down. What are they going to do with all that cheap hydroelectricity is not being used. When Genesis started, they were in Bosnia, they were in Eastern European countries where they built these hydro plants and there was no grid. So they were able to go in and all of a sudden create jobs and have inexpensive electricity. They created economic activity. So really their business model has been to go for pockets of stranded electricity that's green.
That's fantastic. Now, you said you are currently mining, you're currently mining Ethereum, and I believe it said that you guys are launching your Bitcoin mining in September, I
In
think. And now,
September in Sweden.
awesome. And are you guys also, since it's GPU miners, are you guys focused on Ethereum, or are you mining other coins as well?
We're mining other coins, but Ethereum is probably the biggest breadwinner because it's also the most liquid. And we sell a very small portion of our daily production on the volatility of the coin as surges. And then we've been banking our Ethereum so that we have a big pool of Ethereum, because if we do go to, we've been hearing about it, to go to proof of stake over proof of work, if that happens, then we'll have a big pool of coins to basically put on the table, which we'll earn income from and be able to in that position. And then we can take our GPU cards to do mining of other coins. So we feel that we're trying to be able to anticipate to how to pivot and when.
Yeah, that's a pretty good idea to have the eye to the future, because that switch to proof of stake will be very interesting to see how that goes through, how smoothly the transition is, and what the miners decide to mine with their GPU power once that is no longer available for Ethereum. Now,
and the other, so I mentioned earlier, there is that, what you're saying is that there is a big push to get in the position. People are trying to buy these stranded miners that too expensive, etc., for rendering, for artificial intelligence, and for the movie industry. So it's already in motion.
Yeah. So it's different from Bitcoin mining, because the ASICs are specifically designed for the task of mining Bitcoin, whereas when you get into GPU mining, there's multiple uses for that. So you're saying that there's some resale value there in the rig itself.
Here's the best way to help for your listeners, and it was explained to me. You've got to think of Bitcoin as a stranded, one piece long piece of spaghetti. And the ASICs chip comes along and it goes along that string very quickly and processes the cryptology and unlocks and relocks that coin. Ethereum, the smart contract, is more complex. It's more like ravioli with feta cheese and spinach in it. So you have to have a GPU card which has X, Y, and Z axis. So that's like also for animation and for games, etc. So you need more complex programming capacity. So that's why GPU does the smart contracts.
Awesome. I love that analogy. Now, Ethereum has had a pretty good uptick the past couple of weeks here. Well, even the past month. So I'm curious how that, you said that you guys have been holding some Ethereum in anticipation of the switch to proof of stake. So just as a ballpark, what does a $10 move in Bitcoin do to Hive's bottom line?
It doesn't do much when you think of it that way, except for the millions of coins we own in existence. It will go up and down. I think that's more significant is the $100 moves throw off a lot of. That's very important when you're selling your coins, 10 to 20 coins a day. That's the big difference there. But right now, more important is our build out of taking our cash to build other miners to deal, because one thing that you got to remember is that as these coins go higher, more people come in and compete for the same piece of cake. So there's less crumbs for everybody to participate in. That's called hash rates have been rising. So I think that that's just an important factor, is that as we get this build out, that we can have a bigger scale to deal with the rising hash rates.
Absolutely. Now I've got one last question for you, because you were talking about Coinbase being valued, I think you said $8 billion. What
6 months ago was 1.7 billion.
Oh wow, that's wild. Now my question is, how does Hive start to build towards that? What's your path? How do you get to that kind of evaluation?
Well, it's by growing and building out. We've had people, want to talk to us because we have the most sophisticated. I'm so thrilled about having Genesis Mining as my strategic partner because they have all the intellectual capital that would take you so long. I've heard about people buying a bunch of A9 miners and thinking they're going to get in the business and find out they have no idea about code location centers and all the things you have to go into it. They're oblivious. So there's been lots of like stranded ant miners around. And so what I think for us to get that scale is to make sure that we're so close with Genesis Mining in that build out. The build out of Norway will be significant for us. And I think that our coins are virgin coins. There's no AML issue with them. There's no KYC. They have more value. So where we've had people approach us to want to give us immediate cash every day for our coins and not have to go through a longer process, pay us a premium so that they have their coins, because if you want to come and buy our coins, well, they're not like blood diamonds. They're from Africa with all that big problem. They're now for Canadian diamonds, have been coated, and therefore they're clean diamonds. So we have the clean coins. That I think is an important strategic position for a relationship with the Coinbase, or in Canada, it's Einstein. I think Einstein's done a great job in growing, and they're always on the hunt for those virgin coins because that's what their consumers are looking for.
Yeah, absolutely. Now, Frank, I did want to mention one other thing here before I wind down here. You're obviously partnered with Genesis Mining. One of the other bigger institutional owners that's involved with Hive, Fidelity, is that right?
That's correct. And I think it's just the leadership, as I mentioned earlier, that the CEO has all their employees embracing blockchain. They can have wallets and they can buy food at their cafeteria. She has her own Google type of labs. They're doing this work because the concept of blockchain to do all securities transactions, that would be no fraud, no illegal shorting, settle every 10 minutes, is extremely valuable. In fact, when they do look back at 2008 crisis of Bear Stearns and then Lehman Brothers going bankrupt, you wouldn't have had such a problem because you would have had an audit trail. You would have had things settle on time. And the whole idea of the smart contract would have been front end loaded so that there was no the problems that they had to resolve that whole crisis. So I think that the firms like that are in place. And so in Canada, Fidelity's coming about 10% of the company. 15 other institutions have become substantial shareholders of Grow. So you have, Hive. Grow is a public company which I control, which has a major investment in Hive. And so what we've seen is that a lot of the similar institutions in Canada have gone in and bought Hive. And I would speculate, you're talking about over 20, probably 25% are owned by institutions now, own Hive. And you would have then, you take a look at Genesis Mining owning 25%. So really the float is about 50% are retail, and it's very liquid. Now, what's happened though is the quant funds dominate trading every day in the stock market. Financial Times did an article that 70% of stock trading is done by various quant funds, and many of them have basically used Hive as a proxy to go and play Ethereum. And so our volatility is basically gone with Ethereum. And so we're much more volatile, but our underlying, under the hood, the fundamentals are very steady. Engineering build out for increasing the production, but the overall movement of the cash flow is very volatile.
Fantastic. Now, Frank, I did want to thank you so much for being on, but I wanted to give you a moment to allow people to find out where to find out more about Hive, about yourself. Can you refer them to any places on the web where they can check you out?
Sure. Hive Blockchain Technology, just Google it, go to the website, become a subscriber, watch the videos they have. They have lots of information, good content to learn from. And they can follow me. I have the Frank Talk blog at usfunds.com. I have readers in 180 countries, and I write on a regular basis. We publish every Friday the Investor Alert, and we add it all up, about 40,000 readers in 180 countries. So it's free. So they can hear about my thoughts about the stock market, the gold market, and blockchain and cryptocurrency, etc.
That's great. Again, Frank, thank you so much for being on with me. I always love having guests being able to talk about some current events and to be hearing about what they're doing in the blockchain space. So thank you so much for being on.
Well, happy investing to all your listeners.
Well, thank you very much. And everybody else, thank you for watching. And be sure to check out Hive. I'll have links down below for anybody that's curious here. Thank you guys so much for watching. Please don't forget to hit like and subscribe, drop a tip if you're able to, and share this video. See you guys next time on the BTC Sessions.